Hey everyone, of course artificial intelligence has been the hottest investing trend for over a year now. And Nvidia, of course, being the one that's benefiting the most out of this AI wave, but also Intel is poised to benefit. So I'll compare these two AI stocks in this video and answer which one I think makes a better investment for long-term investors looking to capitalize on this AI investing trend. So let's get right into it, starting with revenue.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I wanted to compare Intel and Nvidia on revenue over a decade. And in this last 10 years, Intel had long held the lead against Nvidia in terms of overall trailing 12-month revenue. But that changed dramatically in 2024 when Nvidia surpassed Intel, and it now has 79.77 billion in revenue compared to 55.24 billion against Intel. And going forward, I suspect Nvidia will continue to keep this lead over Intel over the longer term. Now, Intel is making huge investments in expanding its capacity, expanding its business, not only being a company delivering and creating its own semiconductor chips, but now it's expanding its foundry business to manufacture chips for other companies as well. So that should boost revenue for Intel, but I don't think it's going to boost it enough to catch up with Nvidia unless Nvidia, which I'm not expecting, experiences a big drawdown in revenue, which again, I'm not expecting that to happen for Nvidia. I suspect Nvidia's growth rate might slow down over the next 5 years or 10 years, but I don't suspect that it will experience a big revenue decrease. Now, the rate of growth would decrease, but not the overall revenue number. Interestingly, when you compare these two on their operating profit margin, they were very close for the better part of the last decade. Until again, in the last couple of years, Nvidia separated itself, really increasing its profitability as revenue surged. That's been the most impressive thing for me with Nvidia and its business and the way it's exploded in the last couple of years, is that it's came with a higher profit margin. The business didn't increase because of some promotional activity Nvidia undertook so that it can increase sales. The business increased organically as demand for its products soared, and Nvidia was able to capture full premium price sales of its product at growth rates of over 100%. That's been what's truly impressive with Nvidia. Its operating profit margin over a trailing 12-month period, 59.84%, compared with just 1.29% for Intel. Of course, the reason Intel's operating profit margin is declining from recent years where it was consistently above 25% was those big investments in the foundry business I highlighted earlier in the video. Those investments are initially going to bring down its profit margin for a couple of years, and it's already been over a year. But then later on in the decade, closer to 2030, it should be able to recover these investments and its operating profit margin should rebound above 25%. Now, Nvidia is benefiting already. Intel, perhaps later on, will benefit from the AI wave. Intel already benefiting from massive government stimulus looking to onshore semiconductor manufacturing. Intel will gain billions of dollars in government grants and billions more in government loans for its manufacturing expansion. So the timing of its manufacturing expansion has been excellent to coincide with the government's plans to onshore semiconductor manufacturing. So good timing here for Intel management. Similar story with the cash flow from operations to sales. They were close for the better part of the last decade before Nvidia really took the lead here, and at 50.8%, more than double that of Intel's 21.78% in cash flow from operations to sales. And just like the operating profit margin, I think Intel will recover a higher cash flow from operations once the peak cycle is over with the manufacturing investment expansion. And then it will start to reap the benefits of those investments later on down the line. Perhaps not this year, but probably starting 2026 and beyond. All right, if we look at the balance sheet item, long-term debt, Intel up to $52.45 billion, which is more than 5 times the long-term debt of Nvidia at just $9.71 billion. Intel is a more asset-intensive business, given that it manufactures its chips, and now with the foundry business investments, it's even more asset-intensive. Nvidia doesn't manufacture its own chips. It's what's known as a fabless semiconductor company. Taiwan Semiconductor does most of Nvidia's manufacturing, so it outsources production, which makes it a more asset-light business model compared with Intel. And so that can explain partly why it doesn't need as much debt as Intel, because Intel needs to make bigger investments. Intel has made partnerships with outside firms to help reduce the cost of these manufacturing expansions. Still, it's a very large capital investment requirement from Intel to make these investments. Now, on the flip side of that, it also gives you a competitive advantage when you have those large investments, because there are not very many companies in the world that can manufacture semiconductor chips the way Intel can. I can count on my hands the number of companies that can do that. It's Intel, it's Taiwan Semiconductor, it's Samsung, and I might be missing 1 or 2 off the top of my head, but the number of firms that can do this is limited. So you do restrict outside competition because of these requirements for capital investment. And so there's pros and cons with this type of business model. And for the latest year and a half, Intel's faced the downside of this, which is the large money it needs to put out, the decreases in operating profit margin, the decreases in cash flow because of these investments. But then if these work out as planned, then 2-3 years down the road, the company will reap the benefits of these investments without fearing that 10 or 20 competitors are going to jump in to capitalize on these investments. So Intel investors can reasonably expect the company to reap the benefits of these investments, although the magnitude of the return on investment is highly uncertain. And finally, I wanted to compare these two on their valuation. And judging by the forward price to earnings ratio, Nvidia is more than twice as expensive as Intel, trading at a forward PE of 15.5, compared with Nvidia at a forward PE of 34. Still, I think Nvidia has earned this premium valuation. So if I had to pick between these two semiconductor stocks, I would pick Nvidia stock today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.